everybody, Mike DeCepoli, Heritage Financial Advisory. Welcome to Heritage Insider Weekly for Friday, June 12th, 2026. Hope you're all having a great week. We are back on another big week to update you on the markets and the economy. We had a lot of economic data this week, as well as the much awaited, much anticipated SpaceX IPO, which is set to go live here in just a few minutes. Perhaps it'll even start trading while we are doing the video here together. So we'll bring you up to speed on everything to look for with that. We'll talk about the markets, right? We had a lot of volatility over the last week. Big sell-off last Friday. It carried a little bit over into this week. Markets firming up a little bit now and trying to recover some of those losses. So we'll talk about what transpired there as well as where we go from here. So you can see the headlines here. SpaceX awaiting first trade. The indicated price was $135 a share. It looks like it's going to open closer to $175 per share, which will make it the largest IPO ever, in the neighborhood of $1.8 trillion of market cap valuation. They're not making, obviously, all shares available on the market. I believe they're looking to raise about 75 or 80 billion through the initial offering. But nonetheless, a lot of the internal shareholders, the employees, the initial people who stake the company, there will be a lot of new millionaires and multimillionaires minted today, those who have held these shares for quite some time in the private market. So we'll talk a little bit about recent IPOs before we wrap up here today. But let's get to some of the other news of the week first. We had a lot of inflationary data this week. We got our consumer price index, which came in at a 4.2% annual rate in May, which is above, was in line with expectations, but naturally a number on the high side. Anytime you see a 4 in front of CPI, never a great thing. The market did really not react to this, kind of took it in stride, so I guess it was largely expected by the market. Which was interesting about this report, and really not surprising in any way at all, is it's entirely driven, again, by energy. Okay, the core components of this, which look at shelter and housing and food costs, remain pretty consistent over the last 12 months, but energy continues to push the CPI higher. So that's something that bears watching. Naturally, you would expect that if we can ever get a resolve to the conflict with Iran and oil prices come back down, the CPI, led by the energy component, should come back down as well. But right when, if, and how that happens will be anybody's best guess. We did have some news on Iran this week. For, the 37th time, we were told that a deal is in place, and then shortly thereafter, as has happened every other time previously, Iran said that no deal is in place. So it appears that a deal is still out of reach at this time. We're kind of feeling around in the dark here to see what, if, how, and when something may come together. But the markets seem to be kind of taking it in stride as, again, 47 years this has been going on with Iran. I don't think the market is too surprised that the two sides have not been able to come together on agreement just yet. Here's a little color on the CPI. This is actually the producer price index, but it looks very similar to the data we're seeing on the consumer price index. And these are all the core components that come together to bring that headline number that you see. And you could see the purple, which is energy, is accounting for all the gains in these indexes or in these readings over the last number of months, right? We just talked about that. No surprise there. This is all due to higher energy prices. Services looks like it's remaining consistent. Goods, less food and energy, right? So when you look at the yellow, even though it looks like it's trending up, that's just due to the energy subcomponent pushing it up. Very consistent over the last number of months, really kind of holding steady. So the inflationary picture, while the headline number does not look very good at 4.2%, it's entirely driven by one core component, which is energy. So the administration has some work to do here to get energy down, and obviously a deal with Iran or some sort of agreement, a memorandum of understanding, as they call it, MOU, would go a long way to easing energy prices. Let's take a look at the markets here together. Let's discuss some of what we saw last week. Now, last week when I did the video, was prior to market open, and obviously that, let me just switch up some of the things we have. There we go. I did it prior to market open, and obviously that was before the big sell-off that unfolded last Friday. And so a few of you reached out to me and were just curious if my views on the market had changed at all given the sell-off that took place. And the answer to that is no. And I want to tell you a couple things about the market that are important to keep in mind here, both from a secular trend standpoint as well as just an overall technical analysis view of the market. The first thing that you have to understand is that markets will correct on occasion. That's just part of, that's par for the course. It's table stakes in investing in financial markets. And in the market that we've had here, where the market logged 9 consecutive weeks of gains, which was wonderful, you're due for a pullback at some point. Now, when those pullbacks happen, there's another thing that's very important to remember. We are in a secular bull market, right? Secular bull markets, as they age, which this one is aging, we still have a lot left in the tank. So let me just be clear on that. But this one is not brand new. It's a couple of years old at this point, really, depending on where you kind of peg the starting point. We're a number of years into this secular bull market. The characteristics of secular bull markets are, many, but 2 that you need to remember is, number 1, secular bull markets are known for incredible exponential gains. But number 2, they are known for very fierce and vicious, scary corrections. And so essentially what happens as these bull markets age, right, the gains get, kind of amplified. And the corrections, which used to take weeks to months, are compressed down into hours and days, okay? And so it's kind of like the market takes the stairs up and the elevator down, okay? And that's exactly what we saw over the last couple days, right? We had really kind of just moving up with very low volatility in the market, a lot of resilience, every dip is being bought, and then all of a sudden, the market takes a really swift move lower, right? Last Friday, markets were down about 4% on the indexes, and many individual stocks were down 5, 10, some 12%, right? Big moves, scary moves on the surface, and catches a lot of people off guard, right? And that's the complacency that the market had built in, and then it's kind of like that shock value that the market tends to deliver. And so again, corrections are normal, and very volatile, vicious, swift corrections are normal. So this, to us, okay, is looking like what we would call a shakeout, right? When the market has great intentions, it really needs to kind of work through what we would call bad inventory, or kind of flush out bad inventory. What is bad inventory? It's shareholders with weak hands, if you will, right? Weak hands. They're unable to hold on to their shares. And so the market flushes them out of the market. The correction that we saw, really kind of going from the end of last year through this year and in the beginning of this Iran war, was more of a slow rolling correction of time, right? It took a lot of time. Yes, the price went down, but it wasn't very drastic, and it was more of a correction in time. And then we shot out of a cannon. Now you're having a very swift correction in price, okay? And so corrections take different forms. Sometimes they're time-based corrections where we kind of slow roll for a while, and sometimes they're price-based where they're very sharp, they're very vicious. And so, as I always say on these videos, they only shake the tree hard when there's something good at the top. And there is certainly something good at the top for this market, but the market likes to work through bad inventory, get it out, force out the weak hands, force out those sellers, and then the markets can trend higher. You can see that we did not have any extreme volume of selling over those number of days. It was just really more of a buyer's strike, right? People see the market has risen a lot, they get that first sign of a pullback, and people take a wait and see approach. Now, the second component of this that's likely at play and should abate now is that SpaceX is going public today. And so investment managers who had big allocations, or funds who had big allocations to buy SpaceX, they need to raise money somewhere, right? They need to raise liquidity to go buy these shares that are now going public today. And so what happens? How do you raise liquidity in a market? You got to sell something, right? And so that selling that kind of crept in here to us is really twofold. I think it's a very vicious secular bull market correction, right? Stairs up, elevator down. And I think it's also firms and funds seeking liquidity to buy the allocated shares that they've gotten for SpaceX, because a lot of these funds knew they were going to get SpaceX for quite some time, but they weren't told the amounts that they were allocated until just last week. So now if you're a fund and you find out, hey, we're getting $1 billion allocation to SpaceX, guess what? You got to go sell $1 billion of something somewhere to bring the liquidity to have it, to fund it. So I think that's what's going on there. But overall, markets are reacting very well. You got that swift move down. Really, I mean, we're talking 4 days, folks, right? On the order of 4 days. A snapback rally is unfolding here, and we'll see where the market lands today. But I actually believe that the SpaceX IPO, it occurring, and not say getting past it, but having it take place will be a good event for the market because it's going to remove a lot of anxiety. People back in the 2000s have like bad memories of all those IPOs kind of marking the top of the market. And the reality back then was that way too many companies came public at the same time, and there just wasn't enough available buyers to fund them all. Here, we're talking about 3 to 4 big IPOs this year. SpaceX now, OpenAI, and Anthropic later this year, maybe 1 or 2 more, and they're very well spread out. So I think the liquidity is there to support this. We will see what the market has in store. And then, of course, when we look ahead to next week, we have our first Fed meeting with the new Fed chair. So the market, I think, was kind of flushing out a lot of bad inventory ahead of these events. And ultimately, we will see what the reactions of the market look like. But nothing to worry about here. If anything, I think the market is rushing to get this correction in because it has much bigger plans for what lies ahead of us here. So no change in our view. We still remain very optimistic, very incredibly bullish on this market. This market has a long way to go higher. So ignore the noise, stay calm, invest on. Let's stay focused here. A lot of great opportunities out there for investors. Another thing, as this market went through a quick little correction, this is the S&P on the bottom, the advanced decline line, which measures the number of stocks rising versus the number of stocks falling, right? The net number is graphed here in this line. The advanced decline line kept moving higher, right? So the market pulled back, but the advanced decline line kept moving higher, which is a good sign that tells you that there's broad participation of stocks doing well under the hood of the market. Take you back to last Friday for a moment with that big sell-off. There was actually more stocks in the S&P 500 that were up on the day than were down, but because some of the larger ones were down, they were pulling the index down. So again, something that bears watching, but the advanced decline line leads price. So as this continues to move higher, you should expect the markets to continue to move higher as well. Now, just a reminder, as SpaceX goes public today, a lot of fanfare, a lot of excitement around it. People want to buy into it. Okay, I'm not saying it'll be good, bad, or indifferent. I don't know where it's going to trade in the next couple hours or the next couple days. And I think in the long term, SpaceX will do just fine. But here's a reminder that a lot of IPOs, these are a bunch of recent ones, see a big drawdown in their first year as the insiders, the lockup, which is there's a 6-month lockup period where they cannot sell. The lockup expires and you're going to get a lot of supply coming onto the market. So we'll see if SpaceX follows this trend here. But just a reminder, right? If you want to buy it and you don't care where it's going to be in 3 or 6 months, you're looking at this on a 5 or 10-year window, then so be it. Totally different viewpoint there. But we don't want to see anybody rush in here at a high valuation and only to see it down 20, 30, 40% in a few months or a year from now. AAII survey. Let's take a look at our institutional investors. We got a little bit of a pullback, and you got exactly what you would want to see and expect to see in the AAII sentiment survey. Bearishness leaped off the page last week to the highest reading in the last few months, 47.7% of bears. After that pullback, bullishness pulled back to 30%. This is a good thing. I know I've said this many times, but we have some new viewers that are part of this viewership audience now, so I just want to clarify this. You want to see a big sign or a big spike of bearishness at the first sign of a pullback, okay? When a market top is occurring, an actual market top, we will have a pullback, and everybody and their mother will say, you know what, no, this is just a pullback, and their bullishness will be high, right? Their optimism that the market's going to snap back will be high. So when you see pervasive bearishness at the first sign of a 5% pullback, that's a very good thing. That means the market did its job to really turn sentiment on its head. And when sentiment is unable to be turned on its head, when you can't dent sentiment, when everybody's too optimistic, that's actually when markets top. So nowhere near a market top. Great reading here. And it just goes to show you that one little shake of the tree really just upsets a lot of these institutional investors, which you would think they'd be better, right? They're institutional investors. They work in the industry. And it goes to show you that a lot of times they're no better than the average retail investor who's flying blind out there. Let's take a look at next week's U.S. economic reports and Fed speakers. We have a manufacturing survey on Monday as well as industrial production. We'll get an update on the housing index on Tuesday. Housing starts and building permits. We'll talk about that. Will tell us, about the health of the housing industry. Wednesday's retail sales, business inventories, and most importantly, the FOMC rate decision and the Fed Chair Warsh, right? First time not seeing Powell's name on this. Fed Chair Warsh's press conference. Now, there will be no rate change on Wednesday. There is no expected change by the Fed. They're not going to hike rates. They're not going to cut rates. They're going to continue to remain on pause. But it'll be the first opportunity for the markets to hear from the new Fed chair, see what he's got to say, and talk about his views on monetary policy in the months ahead. So that'll be something worth watching. Thursday will be jobless claims. And then on Friday, June 19th, the Juneteenth holiday markets will be closed. So there'll be no trading next Friday. So we got a shortened trading week next week, 4-day trading week, but still a lot going on. And we'll get to hear from our new Fed chair. So in summary, markets are doing just fine, folks. Nothing to worry about here. I'm actually kind of glad we got this little correction out of the way. We had gone a long way without anything or any type of a pullback. And so, it's one of these hurdles. You kind of jump over it. You say, okay, glad we got that over with. Now let's continue on higher. So SpaceX still hasn't started trading yet. So I won't be able to update you on what that looks like, but we'll be sure to update you next week when we come back, see how that IPO went and how the market responded. So if you have any questions, of course, reach out to us. We're always here to talk to you about anything that matters with your money. Hope you have a great day and a great weekend, and we'll see you back next week for Heritage Insider Weekly.